Hello friends, myself Dr. Niranjan Shah. Today I am going to explain about the methods of accounting under amalgamation of partnership firm. Let's we discuss about the methods of accounting. There are two types of accounting. First one, closing the books of account in old firm and opening the books of account in new firm. There are two methods for closing the books of accounts. One is revaluation method and second one is realization method. In revaluation method, revaluation account is to be prepared, and in realization method, realization account is to be prepared. Let's we discuss the first method, which name is revaluation method. In this method, a revaluation account or profit and loss adjustment account is to be prepared to record the effect of increase or decrease in the value of assets and liabilities. While amalgamating the firm or while transferring the asset from old firm to another firm or new firm, there were increases or decreases in the value of assets and liabilities. That increases or decreases shows the revaluation of that particular asset, and that increases or decreases shows either a profit or a loss, and it should be transferred to a revaluation account. While closing the books of accounts, some points should be considered. That points are: first one, revaluation of assets and liabilities. Please note that while closing the books of accounts, the following points should be considered. First one, revaluation of assets and liabilities, creation of goodwill, closing of reserves and profit and loss account, transferring of assets and liabilities which are taken over by a new firm, and closing of assets and liabilities which are not taken over by new firm, and finally closing of capital accounts. These are the steps to be followed for closing the books of accounts of old firm. The following points to be considered while opening the books of accounts of the new firm. First one is assets and liabilities which was taken over or which were taken over by the new firm from old firm. And second one is partners capital account of old firm taken over by the new firm. After that, if any, there will be the adjustment of goodwill. It should be considered, and if there is an adjustment regarding the capital of partners, then it should be considered. Under revaluation method, the following ledgers to be prepared. In the books of old firm, revaluation account, partners capital account, cash or bank account, goodwill account, or partners current account should be prepared, of which revaluation account and partners capital account are necessary. But cash or bank account, goodwill account is to be prepared if there is a requirement. If there is no requirement or there is no adjustment on cash or bank account or goodwill account, there is no necessary to prepare that particular account. In new firm, opening balance sheet should be prepared. If there is a provision for new capital, then new partners capital account should be prepared. Also, similarly in the books of old firm, new firm can prepare cash or bank account if there is a requirement. Otherwise, it is not necessary that cash or bank account will be prepared in the books of new firm. Thank you for watching. Please subscribe my channel, like it and share it. If there is any suggestion or comment, please write in chat box. Thank you.